Good afternoon, everybody, and happy St. Patty's Day to all of you. Thanks for sticking around for building a stock portfolio. It's our last live class of the day on the Charles Schwab Network. We call it Trader Talks, everyone. Thanks for being here. The markets has been a little bit choppy, to say the least. Many of the positions that we've been maintaining, the example trades in this class, have been blown out over the last few weeks, and we're going to look to add and build a couple of new positions for us in our example portfolio today. For some of those, or at least one of them specifically, I am going to ask for your input, everybody. So in fact, I'm going to kick off the show doing just that, asking, give me the sector you would like us to utilize our class scan for, and we're going to dive into that sector. I, of course, have a few ideas that I'm going to utilize today to build example trades, but I want to hear from you. So tell me which of the 11 sectors of the market you would like us to work in to build at least one example trade today, and I will go with that for at exactly that. At least one of those examples will be yours, and then the others will be from groups that I know are maybe potentially optimistic or opportunistic, excuse me. So we'll do that after a brief market review. Now, say hey to Connie Hill in the chat. Connie is a colleague, a friend, a CMT. Excellent to have along the path here with us in the chat today. So you can follow Connie and me on X, Connie Hill CS, Kevin Horner CS. As always, I want to remind you the best place to find us coaches when we are not hosting for you here is on X. And then lastly, just make sure you're subscribed to the channel, everybody. So let's get to those disclosures and we'll dive into the discussion. So first of all, remember that everything we cover for you today should be considered informational and educational. We do not make recommendations. We do not endorse any specific approach to trading the market. We will utilize technical analysis as we have always in this class. We'll use it to analyze the broad markets, to discuss leadership of sectors in the U.S. markets, and to potentially enter our example opportunities as well. So consider what I bring to the table in the way of technical analysis simply concepts and strategies traders may choose to employ. Nothing more than that. All right, now, additionally, we'll give you a little bit of a reminder as it relates to the thinkorswim desktop application. We work in a paper money version. We do not traditionally incorporate options in this class, but you do need to be aware that not every detail of option trading is the same in the paper money version as it is in the live version. Most notably, you'll never receive an early assignment on a paper money trade, but that can happen anytime that you're short an option. You need to be aware of that. All right, so as I said, we're going to go with a brief market review to kick off things here today, and then we're going to make sure that we expand into our example portfolio and have some discussions about where we're looking. And if you want to get your thoughts and ideas as far as where we scan today, please let me know. I want to hear from you which sector is the sector you would like us to scan in, and then I'm going to do just that. Now, in scanning, I'll remind you that our process is one for trend traders. What we're looking to do is to scan the market in sectors that are already bullishly trending, which is to say, showing you a series of higher highs and higher lows, and potentially at areas nearer support. We don't mind buying into individual equities near support, particularly if the group in which they reside is already bullishly trending. So one thing we will be covering here is just the concept of what trend traders are looking for. So when we look at the S&P 500 today, I'm certain that many of you are out here feeling a little bit less comfortable than you've been maybe in the last 2 months or so. As you can see, we have come down pretty well, about 300 points or so from our previous highs, up there in the ballpark of 7,000 or so. And those previous highs represent about a 5% drawdown. I'm sorry for my my draw tool here. Let me change this the way that I would like it to be. Looks like I've got some lag situation working here today, so I'll apologize for that as well. Now, what I wanted to do was just kind of remind us that we have not seen the short-term trend validated bullishly for some time. We have been below the 20-day moving average for 21 of the last 23 sessions. And the one time we were above it was for about 2 days back here in mid-February, late February, actually. So if you were looking at the 20-day moving average, then you basically had not a lot of reason, certainly not a confirmed reason for a breakout through the 20-day to the upside. So a lot of traders kind of remaining a bit in a neutral stance as we've consolidated. And we could call it that. I mean, it is really 5% off the highs, but ultimately consolidating as we near the 200-day moving average. The reminder I want to give you all as it relates to the consolidation window is we should expect them, right? Especially following big moves to the upside. So if we found our first peak to where we rallied and then we started our breather, it went up 43% in 145 bars. That's 7 months in length, and we gained 40+%. So traders, be thoughtful. Should we be anticipating a pause to a rally? Should we expect that momentum would wane? Many traders would suggest we should at least be prepared. We love strong uptrends that work against a short-term moving average like the 50-day or the 20-day, but when they change, we need to change too. So I'm hopeful that traders have become a little bit more defensive of late. Maybe you've been using this neutrality and market sideways conditions to build cash, and there's nothing wrong with that. It means that you're simply preparing for your favorite opportunity to buy when stocks may very well be more affordable, or we have found an area of what many would suggest to be support. In this case, could be the 200-day moving average, could be the lows we hit back here in November. That level comes in around 6,500. So you've got an area for potential short-term support. Near term, very short term, I'll show you real quickly here the hour-long bars. And I just want to remind you, this is a quick chart. This is only 30 days. Let's make it 90. And just pay attention to the downsloping nature of my intra-period moving averages. Clearly, we are bouncing into resistance levels, making lower highs. And I think that's one key takeaway, because when you see this on the daily, it may not resonate as much. But if you look for it over a shorter term window of time, incorporating shorter bars than, say, the daily, I think it becomes fairly evident. Lower high right here, okay? Lower high, another one right there, another one right there. And you can see what I'm doing, everybody. This is merely stepping us lower. Does it mean that it has to only go down from here? Of course not. But what it does imply is that in order for us to start feeling better about the potential for the S&P 500, don't we have to make a higher high at least in the short run? The answer to that is probably yes. So we had a good low down here that we double tapped over the last 2 weeks, right? We tested it with the low here last Friday, tested it the prior Monday, and we came off of it. But we only rallied into the gap zone today. And so this kind of reflects an area for us. If we can make a higher high above the high we just made this morning, then we may have an opportunity to get something rolling. I think many traders would agree with you, Gary and Jay, about the nature of what we're seeing in the S&P. Reminder, when you think about trends, when you think about tops and bottoms in the market, one of my kind of favorite little idioms as it relates to those, tops play out over many periods, many weeks, many months, and sometimes many years, whereas bottoms tend to be violent in nature. They tend to be quick and speedy and occur over a couple of days to a couple of weeks, as opposed to a rolling scenario like you're seeing with the S&P right now. Not to suggest that this has to be a top, but this is what we look to do. And you're right, Beth, everything is ifs. Technical analysis is nothing more than us putting probability on our side and using that probability to position ourselves properly in our process. So I'm never going to be able to use technical analysis to tell you what's going to happen next. What I am going to hopefully be able to do is to use technical analysis to say, well, as long as this level holds as support, or if this level breaks as resistance, I now know how I want to position myself. That's essentially what we're looking to do with this class. Now, so there's a quick look at the S&P. I'm not going to dawdle here on the NASDAQ and then the Russell, but I'll just bring them up. You'll notice that what we see here with the NASDAQ 100 is a recent test of the 200-day moving average. We are remaining above the 23% retracement level from a Fibonacci sequence standpoint from our trough at the tariff tantrum trough we saw to our peak we achieved in October. Essentially sideways as well. We're not going to take too much more from what we see here in the NASDAQ 100. And then finally, the Russell 2000 has held a little bit of support. We are seeing a bit more pressure in the Russell as we've had oil really impacting the broader markets. And because oil tends to be quite inflationary as it rises through significant levels, it does become a overhanging tailwind, rather headwind, excuse me, for the Russell 2000. So do want to be aware of that. Yeah, Eric, it's kind of true, right? At bottoms, markets crash, effectively giving us, or commonly giving us the capitulation that is necessary, which is and what is capitulation is just when basically all of your bullish traders who have held the steady hold of all their positions, they get down to the level where they can no longer manage it, right? They just literally throw their hands up and they say, all right, I'm out of my positions. That's capitulation. That is when the bulls say, I have nothing left to hold on to. I can't stick with it. I've got to sell. That is capitulation. That's kind of what a bottom represents, and commonly those happen rather quickly. Okay, now with all of that said, let us take a look next at where we've had our leadership. So today's action was led by energy, discretionary, communications had some decent days, a decent day today. But you can see that of our leadership groups, energy remains the number one year to date, up 30%. Not to suggest that that has to continue, but it's been a fantastic run for the space. Additionally, we've had utilities doing quite well, and staples is potentially at an area of support that could play out favorably for those willing to take some chances in a defensive space like that. But, I built the scan that we'll be using, the same scan we use in this class frequently. So for many of you who are new, I'm going to review that for you. And I'll just remind you, it is, again, a trending scan. So all we're looking for is within these individual sectors of our choosing to find stocks that are trading and closing above their 20, their 50, and their 200-day moving averages. And of course, if you're closing above all three of those moving averages, the odds are in your favor that you're looking at an uptrend. The question is whether we're catching that uptrend early, or are we participating in the uptrend that's already developed and in play. So, of course, energy would be a key group to check out. Now, before we actually, let's go ahead. We're going to dive right to it. Let's just go ahead and look at examples. So, one of those examples that I was pulling today, let's see, what is the list I've got loaded already here? We are looking at energy. Convenient. Okay, so I'm going to open up my energy watch list here when my lag settles a little bit. And let's see some of the stocks that we've got in this list. Now, I'll admit, in the energy list, All right, everybody, I am back. I want to thank you for your patience. We ran into a little YouTube difficulty there, but nonetheless, we are ready to get back to the discussion here, looking at energy for our scan. And I wanted to, as like I was mentioning before things kind of went awry for us, that we are looking for stocks that are already upward trending. What we may not want to do as traders in this class is be buyers of stock like Apache or APA Corp at this elevated level. Don't get me wrong, new highs are not bearish. However, the takeaway here is if you wanted to rely on the 20-day moving average, as we prefer to do, because that's what's trending, that's what's working as a supporting moving average in APA's process, and we want to incorporate an average true range for that specific stock, and we want to come beneath the 20-day moving average, in this case by the amount of the average range of $1.35, well, that means we'd have to be an entrance at around 36 and an exit at around 30. That is a $6 amount. Okay, that's a lot, right? $6 on a $36 stock. That is probably more risk than we want to take. That's why, at least in this class in particular, we don't mind buying new highs, but we want to buy new highs when we find them near support. So I actually had a position in this space, is kind of still near a level of support, but still bullish and still near highs, and that happens to be Halliburton. So here's what I'm talking about. Look at the excellent upslope of the 50-day moving average. When I say excellent, what I mean to say is a nice angle to it, right? That's a nice 45-degree angle upward. You've also got a number of tests along the way that we want to call out. We had a 50-day, beautiful 50-day test right here. We had another breakout from highs through highs, and then we saw the rally, and then we've had a couple of tests over the last couple of weeks in here, right there, and one right here. And so we know that if nothing else, at least back to October, the 50-day hasn't been violated on a closing basis. Now, that doesn't mean it can't be violated on a closing basis, but if it were, well, then we'd have reason to maybe change our thought process a little bit. This one stands out because now we can enter at under $36 or near 36, put a stop by an amount of the ATR beneath 34. The ATR on Halliburton is $1.22. And so by looking at it here, we might be able to put our exit somewhere in the ballpark of 32.75, and our target, well, let's talk about that. Where might we look for a target? Well, we don't have to put a target on, but I did go back in time and looked at this on the weekly, and I find that there is some clear resistance up above. So clearly, Halliburton has previously gotten into this 42 to 44 area, and it has been an area from which it has retreated. So that gives us a target. Maybe we look at 41 as our target for shares we can acquire, and we put on an exit strategy right beneath the 50-day moving average. So that's what we're going to do in this example trade. Again, incorporating everything that we try to stick with in our process. And if you're new here, everybody, this is really the makeup of our class. We're comfortable with risk of not to exceed $1,000. That doesn't mean you only invest $1,000. It means we don't risk more than $1,000. So we incorporate that into our process. So if we are a buyer at 36, and what we're going to do is place a buy at 36, and because that's going to have to be for tomorrow's market, and it's going to be a limit order, meaning we'll pay up to 36 but not more. So we'll buy at 36, we'll exit at 32.75 stop order. We can't guarantee that price, but we know that that gives us risk of approximately $3.25. And so if I wanted to know the maximum number of shares that I could put to work here, I would take my $1,000 maximum loss and divide it by $3.25. That's essentially a per share cost. And I find that that math comes out to 307 shares. So 300 shares would be less than my full position size, $10,000 maximum. And it would also mean that this works out to keep me within my tolerance for risk. So let's consider this a buy of 300, a full position essentially. And then we're going to do this with a bracket order. So we will have a target order above to sell for profit, and then an exit strategy utilizing a stop by the amount of the ATR below the 50-day moving average. So here it is, buy custom. I just right click in the chart with OCO bracket. And now we're going to go ahead and increase our share total from 100 to 300. Oh, I'm not going to make sure those link in. So 125 all the way up to 300. Okay. Now, again, our limit is good for tomorrow, and we're going to make it 36 or better, and we will always get the cheaper price. Our good till canceled orders thereafter, though, everybody, we got to change those to GTC. So let's go ahead and split the difference on 41 to 42. Let's call it 41.50 to sell. And then our stop, as we mentioned, was 32.75, but I don't want to stick with that nickel. I want to come underneath it. So let's say 32.72. And that'll just give us a little bit more opportunity to maybe stick with our trade. So go ahead and look at this, make sure that it confirms accurately. So we're going to buy 300. Uh-oh, my math was off. We're going to do that smart. We're going to go back and edit this, everybody. So instead of 300, I know that's a nice clean number. We're going to go 275 to make sure that we stay under our initial max position size of 10,000 shares. So there we go. Now we're looking at a $9,800 entrance. And then, of course, we've limited our risk. Should we be stopped out, the likelihood is it will lose less than $1,000, but we can't guarantee it because our stop order, once it triggers, we pay the market price, or we get the market price, excuse me. That doesn't guarantee 32.72. We have gap risk to be worried about there. Okay, so we'll go ahead and hit that, send that off for tomorrow's business. And hopefully we get into that trade rather quickly. And then we've got another one to check out for us starting next week. Okay, now I also have a trade in the industrials group. So I'm going back into my personal list. Now we got recently stopped out. Oh no, did it fall off at the close there? That is terrible. Hang on, I was going to talk with you briefly about Caterpillar, because we got stopped out of Caterpillar, and some of you are going to wonder, hey, why didn't Cat make the list? Well, it's because we're below the 20-day. So remember, when we built the scan for this class, it is show me all the stocks in these sectors that are all trending above all three major moving averages, the 20, the 50, and the 200. Doesn't mean that Caterpillar isn't a good entrance right here. A trader could easily decide to work with the 50-day moving average here, but because we're below the 20, it doesn't quite fit. Interestingly enough, I see that GEV, that GE Vernova right here. Now, the risk here is probably a little much if we're going to use either the last low or the 50-day moving average. Okay, look at this, everybody. That's 85 points away. That's a lot, right? I mean, that's a lot of risk to take on. And I posit that we don't want to take on that much risk. It doesn't mean we couldn't make it work. If a trader said, yeah, I'd be happy to buy a 25% position, only 2,500 shares, that's only, or dollars, excuse me, that's only going to allow you to pick up 3 shares at maximum, right? But you got to have an exit strategy somewhere in the neighborhood of a lower low or break of the 50-day moving average. It just doesn't quite fit for our process. I really am disappointed. Let me see why the stock I was watching, Fastenal, fell off here. So when I pulled this up today, Fast was below our was above the 20-day, and now it's below it. So at the close, Fast is below the 20-day. That said, it is also in a bit of a compressed price level. And I'm still going to build one for you guys here as an example trade, because I feel like this is it's an improving chart. And number two is that we have the 200-day and 50-day moving averages potentially providing us support. So let's talk about that. Look at what we've got to work with. First of all, we cleared a gap zone right here. And that gap zone, not only was it cleared, we got a rally out of the stock following that, and then it got thrown back for a successful test right here. That is a positive development. Further, we've also noted that since the break of the downtrend line, right through here, check this out, we've only seen bullishness. So we've got a breakout, a throwback, a test of support, and it coincides with a long range moving average, that being the 200-day. So if we use the lowest level here, it would be the 200-day moving average at 44.41. Now, 44.41 less the amount of the average true range, and now we know where we would place our stop order. So we are from 44, I'm going to do the math on that for you, 44.41 minus our average true range of $1.16 gets us an exit at 43.25. Okay, so that becomes our stop level. Now, we could go with an exit strategy above us if we wanted, but ultimately, let's get ourselves into the trade with a protective order, and then let's see how this goes. If we're back below the 200-day, then we probably get stopped out. That's fine. If we get stopped out and we're back below the 200, we probably don't want to play in this sandbox anyway. But if not, then we may very well see something positive developing here. So let's give this a shot. I'll go ahead and right click with our buy custom, but only with a stop this time, everybody. Now, our close today at 46, let's go ahead and make sure we go a little bit above that so that we can put ourselves, have a greater chance of being in the trade. So let's call it 46 and a quarter. Well, 46.30, that'll give us 37 cents of wiggle room. That's a little more than 0.5%. Hopefully that'll help us to get into the trade tomorrow, okay? So we'll go to 46.30. And then again, our exit strategy is a stop at 43.25. And I'm again going to get off of that quarter because I don't want to stay, I want to use levels that are less likely to be used by the majority of traders. So we're going to come a few pennies. How about 43.18? That'll give us just a little bit more wiggle room. And then in terms of the amount, as long as we, entrance is at 46.30, we'll be risking about $3 a share. We can afford a full, we could afford a full position size. We're going to only go with about half a position size, 100 shares, about $4,600 total. Okay, so that's still all within reason for what our goals are in this class. So we'll go ahead and set that one up for tomorrow's business, and we are good to go. Now, the last one we're going to do is a literal on the fly, and I'm going to work my way back up the list. I heard from a couple of you stating you wanted to see, I saw utilities on the list. I also saw a couple of utilities actually. Did hear from Life in the Fast Lane, scan the industrials, financials. Boy, let's look at those financials real fast because they look downright disgusting. Ugh. Yeah, look, I mean, we're still below the 20-day. We are maybe grasping at straws. Is it oversold? Sure. That doesn't mean it's a signal to buy, though, unfortunately. And again, we're trying to be trend traders as best we can. I think from a trend standpoint, energy and industrials make sense. We've seen those have retreated. Energy is trading at highs. Industrials pulled back to an area that could be easily considered supportive and has come off of it. I think maybe let's do this. Let's look at utilities. I'm going to suggest we look at utilities or tech. So let me hear from you guys one more time. Let's see if we can clarify. Do you want to try a scan in utilities? Do you want to try a scan in tech? Here's the utilities chart holding up rather well in the grand scheme of things. Notice how the volume down below here, let me just add in average vol, because I like to see how we do on the selling days. And oops, I didn't want to put it there. put it actually in the volume pane. There we go. Yeah, see how the selling days have been through that average, and the last week as we've popped higher, volume has not really participated, but I'm seeing a lot of requests for utilities, so that seems to be kind of leading here. Let's look at utilities. We're going to go into, I think I've already got this built for you. Let's go in here. Personal, I have here, it is. So uptrending in utility space, it's a big list. Remember, this is essentially the S&P 500 within utilities exclusively. So you're going to get a full list. In fact, the list today is 22 deep. And you know what I like about it? If nothing else, everybody, I like that they're in the red today broadly. You know, that's a day in the red is not a bad day to be a buyer necessarily. It's antithetical to how we humans think, but that doesn't mean it's wrong. So let's just kind of work through here. Here's AEE right at the top. American Power, Electric Power coming in on its 20-day. That 20-day is close. If we wanted to use the 20-day there, that might make a little bit of sense. I'm going to look for one that just jumps off the screen at me, like this one almost. I mean, American Water, concern perhaps. I mean, it rallied into a trend line, if depending on how you choose to evaluate manually drawn trend lines. But notice the 20-day speedily rising, catching up to the 200-day. If I extended this line forward a few days, let's see here. Go into the end of the week. And then where is that line coming from? Always good to look back in time, right? Okay, so this was an area that was support, became resistance. Maybe now it's support again, right? So we could, in theory, build one here with the belief that it's got to hold the green line and the 20-day moving average. That could be doable, right? So let's put a pin in AWK. CMS is at highs. CNP dropping toward its 20. We've got a downsloping RSI. That could just be consolidating above the 20-day. Nothing wrong with that. Seeing if we've got anything else that's just jumping off the screen at us here. Boy, this is a good production, though. I mean, a good group of producers. As you can see, some uptrends that have been maintained, a little bit of consolidation of late for some of these. And there's one that's already in our example portfolio, which we need to review here momentarily. So why don't we go ahead with that AWK? Let's see if we can put together a quick trade on AWK for our example portfolio. Looking at 135 as our exit strategy, incorporating an average true range beneath it by $3.53. So AWK, we're trading at the close at 138. So we would again maybe consider 138.25 as a potential entrance. Remember, we always get the cheaper price if it's available. But AWK at 138.25. And then at 135 less the ATR of 353. All right. So that looks like exit around 131.47, everybody, on AWK. And look at where that comes into play. So that happens to be the 50-day moving average. So let's make an adjustment here, everybody. That's a big way to fall, right? So 131.47, we're risking about $7. That's a lot to give up. This might not be a full position size. If you're unconvinced, if you're thinking, hey, we could easily see the 20, but just as easily see the 50. Maybe the traders start small here and see if we can validate the 20 as a new supportive moving average. We did have the test here, right, just last week, and we held it. But we are just in the beginning stages, and so that does mean that for many traders, you're going to look at this and say, yeah, we could still be volatile. We could still see the 50-day. We might not want to own a full position size. Let's get started, though, with just 25% position size and go from there. So let's see, $2,500, if that's how much I wanted to go with at the maximum of about 138, puts us to about 18 shares. Let's round that up. I think we can manage to go to 20 shares. So let's go to 20. Let's put an exit by the amount of the ATR underneath at, what did I designate that? 131.47. So if this works, by the time we reconvene next week, we should see the 50-day rising further. So I'll do a little buy custom with stop, change this from 100 to 20 shares only. We will do our limit at 138.50. That way, if it does go up a little bit tomorrow, we still increase our chance of getting into it. And then our exit, a good till canceled stop at 131.47, and that 47 cents is off the round figure, so we like that. All right, so that does leave us with a little bit of risk, but $7 risk times our 20 shares, approximately $140 of maximum risk there. Of course, we can't guarantee that it's maximum risk, but that's what we are striving for. All right, so we're going to go ahead and place that one for tomorrow's business as well. Now, in our final couple of minutes, quickly, I wanted to review what we got going on in the example portfolio. I mentioned the EXC position. We are already in it. Let me see, did we have a note? We could raise this up a little bit. Our stop is at 47.15. And if we incorporate the ATR below the 20-day, we can raise our stop to 48.04. So I'm going to approximate that by just clicking and dragging. There we go. Pretty close. 48.03. That'll work. I'll hit send on that, and then so we've elevated the EXC trade, and we're going to do the same on Archer Daniels ADM. So on ADM, let me show you what we got working here. This order has a bracket, as you can see, along the right rail. So we've got our exit strategy to the upside, but we should not ignore our downside exit strategy. Let's see about this one. Our 20-day moving average is now 68.91. Our 50-day is 67.09. We were working against the 50-day. So now with the ATR and the 50-day moving average, we can elevate our stop to 64.93. So let's keep moving right about there or so. There we are. 64.90. Okay, within 3 cents of my target, that'll work out just fine. So this way, we haven't done anything other than work to lose a little bit less. And of course, we can't guarantee that we're going to lose a little bit less if we get stopped out, but that's what we're trying to do. We have to manage our process every chance that we get. Obviously, the hope is that it holds this recent breakout and starts trending quickly against one of those faster moving averages, and then we can start really running with it. Now, yeah, I can share this. Let me do this, everybody. I'm going to share what I call the uptrending all time frame scan. I am going to clear the intersect filter. All that means is that what you're getting is just uptrending in stocks that are part of the S&P 500 with 500,000 shares traded daily on average for the last 50 sessions, with closes above the 20, above the 50, above the 200. And if you're adding this for the first time, everyone, think of this as the beginning stage of building a new watch list. So I will share this with you. Please remember that in sharing that, these scripts are not guaranteed for timing or for accuracy. So there you go. You've got it shared now. And then the last one I wanted just to point out was that we have a position that we've tried to put on last week, but I wanted to highlight it because it didn't execute because we placed a buy stop order. Our process here is allowing this a breakout. So we're waiting to buy in when it breaks through the resistance banner up above. That's why we've got that buy stop here at 88. If we get into the shares there, we've got an exit strategy down here, an ATR amount beneath the breakout level, and a target for our upside profit opportunity. Now, it hasn't put us into that trade, but that's okay because we're being disciplined. We're allowing that trade to go the way that needs to go. It's still good, so we're fine on it. But I wanted to make sure that I spoke to that. And then the last note for you all is to take that generic scan and don't forget to intersect with the groups you want to do so with, right? You can do it by your industry groups. I did see somebody out there mentioning transportation. You know, you can absolutely do that. You've got infrastructure, ground transport, marine transport as well. Remember, the way we think about this, I talk about top-down method all the time, right? It's index into sector, into industry, into sub-industry. You can get as refined as you might like. It's at your discretion. All right? Okay, let's wrap it up there, everybody. Thank you, Connie, for being here. Thanks to all of you for your patience and the technical difficulties we had with Alphabet, Google, and YouTube today. But I'm glad you all made it. Please follow Connie and me on X, Connie Hill CS, Kevin Horner CS. If you liked everything we did for you today outside of the technical issues, of course, hit that thumbs up button for me down below. We get this reviewed and archived and into the archive for you very shortly, as early as tomorrow morning, typically. And then beyond that, make sure you're back tomorrow morning with me. I'll be here with Brent Moores for Trader Talk at the opening bell, as is often, if not usually, the case. So with that, hope you all have a fantastic Tuesday, a wonderful St. Patty's, everybody. I look forward to catching up with you all again real soon.